The UK is in massive financial trouble, and latest forecasts suggest that it's going to get a far lot worse. Inflation is still high at 7.9%, which is only slightly down from the 40-year highs we saw a handful of months ago. And to respond to that, the Bank of England and all of its members have recently increased interest rates to 5% from the 0.1% that they were previously, which herein lies the major financial problems for the UK public. And unfortunately, the only response provided by Rishi Sunak is to actually for people to just hold their nerve, but funnily enough, I don't think that's going to help anyone pay their bills come the end of this month.
We weren't even looking at how much it costs to fill up your car.
So look, let's try and unpack some of this just a little bit, and I'm also going to try and make some of my own suggestions as to what the UK government could potentially do to help the situation that we all find ourselves in. Because evidently the approach that they're currently taking in conjunction with the Bank of England clearly isn't working. And let's be honest, is just making people suffer instead. So look, firstly, let's talk about how to control the inflation rate. Well, the lever that the Bank of England have currently pulled is the interest rate one. Because traditional economics tells us that in order to stop inflation, you need to strip the demand for goods and services out of the market. And the only way to achieve that is to fundamentally make people poorer. You essentially look to take money out of society so people stop spending on goods and services. And one of the easiest and main ways that you can do this is to financially hurt borrowers, which are primarily in the form of mortgage holders. So due to that, the Bank of England have increased interest rates to 5%. That's meant that the average mortgage cost for your average semi-detached property is now 61% higher, and therefore will inevitably stop people spending money because they don't have it to spend. And from a traditionalist economic standpoint, it makes sense. But there is a massive, and I emphasize the point, massive problem from going down that route. According to Homeowners Alliance, a good rule of thumb for mortgage repayments as a percentage of your income should be about 35%, which sounds fairly reasonable. And according to Property Report, about 1/3 of people's incomes were indeed spent on their mortgage costs pre-pandemic, which was certainly deemed as okay. But now we're adding a massive 61% on top of our mortgage payments. We're now actually facing into roughly 53% of our income being spent to cover those repayments. That's the equivalent to about a 20% loss in disposable household income when people come off their fixed rates that perhaps they secured a couple of years ago to the rates that we have today. Now, traditional personal finance principles also suggest that a debt-to-income ratio above 50% is absolutely unhealthy. And of course, for many people, a mortgage is just one arm of the many types of borrowing that they have. For a huge amount of people out there, they've got outstanding credit card balances, they've perhaps got car loans, all of which combined could take their debt-to-income ratios well above 60%. So to me, it feels a bit mad, if not slightly irresponsible, that the Bank of England and the UK government aren't looking at the bigger picture here and instead are just intentionally squeezing people's finances to absolutely absurdly unhealthy levels. To me right now, it's not just a matter of following traditional economic principles whereby if you do X, you get Y. It's also a matter of taking into account the overall impact of those decisions that you're making on the general public. Because the fact of the matter is, right now we're actually facing into 1.2 million households becoming insolvent by the end of the year, and according to the Office of National Statistics, roughly 5% of the UK population are even just struggling to put food on their plates. There's no beating around the bush here, that's a very dark financial position that many people are finding themselves in. We're facing into the biggest decline in living standards since records began, which just says it all. And this unfortunately is where, despite having a YouTube channel where I try and encourage people to save and invest and better their financial positions, all of this goes beyond any kind of financial education that I could look to give on this channel. Because the reality is a large part of that has simply been taken out of people's control. This is why it kind of pisses me off a little bit that you've got the likes of the BBC who are publishing patronizing articles on their website about 5 ways that you could look to save money on a packed lunch. To me, it's insane that we're having to even consider perhaps not even filling up our kids' lunch boxes, let alone having to look to cut back on them. That for me is the final straw where the UK government and the Bank of England kind of have to look and take accountability for their actions in the past and make some kind of changes to rectify them. And also just look at other measures beyond that of just simply hiking interest rates. Yes, I completely understand that the interest rates over the past 15 years have been somewhat of the anomaly. I made a video on this a few months back where I looked at the past 300 years worth of central bank interest rate data, and actually the average interest rate is roughly about 4.5% to 5%. So actually where we are right now isn't exactly a million miles away from historical norms, and therefore these kind of interest rates may be just interest rates that we have to get used to. But what is slightly adding to my concern is that actually the latest forecast suggests that interest rates could go much higher, with some economists coming out and saying that the UK interest rates could go up to 6.5% by Q1 2024, which means that mortgage rates, once the banks have added their little bit extra on top, could be anywhere upwards of 7.5%. And actually that central bank rate is a far cry away from the forecasts which were put out just May this year at the Monetary Policy Committee, which looked at interest rates being in between about 4 to 4.5% by Q1 2024. So let's just assume in the best case scenario, the Bank of England don't look to hike rates too much more into the future. What other options could the UK government potentially explore? Well, here's some context. The reason why prices are high is because companies are charging higher prices for necessities that we literally have no other option but to pay for. A report that's been put out by New Unite Research shows that analysing the FTSE 350 shows how profit margins for the first half of 2022 were 89% higher compared to the same period back in 2019. So that's a comparison of pre-pandemic profit margins to the profit margins that we saw just mid last year, which is where actually the inflation rate started to accelerate. I don't think it's any kind of coincidence that we're seeing higher inflation with record profit margins. So truth be told, corporate profiteering very much seems to be one of the underlying causes of high inflation. And let's also not forget that some of it's also been fueled by the UK government themselves. It wasn't all too long ago that everybody received a huge subsidy for their energy bills, which actually cost the UK taxpayer £47 billion, only for that money to quite literally be passed on to the energy companies that then went on to see record profits. So much for a cost of living crisis, it more sounds like a cost of profiteering crisis. So look, with that said, here are 3 things that I think the UK government could potentially look to consider in order to better the financial positions of people all across the country, whilst also preventing inflation from absolutely running away. The first one being, I'd absolutely stick a windfall tax on the energy firms, and I would then use that money to provide grants to the people in the most vulnerable positions, because that means that the energy companies will pay for the grants rather than the UK taxpayer. The second thing that I'd look at is actually in line with the second biggest cost that households have, which is transportation. As a cost that roughly makes up about 10% of household expenditure, like we have an energy price cap, I would also look to have a price cap at the pumps. So the oil companies and the supermarkets couldn't charge any more than a fixed rate that the UK government set. And that would absolutely prevent profiteering, like we've seen from the UK supermarkets selling petrol and diesel in the past couple of months. Thirdly, I'd also enforce that banks couldn't actually charge a penalty for people looking to come out their fixed rate mortgage earlier than they planned. Perhaps this policy is a little bit too late in the day, but it would certainly ensure that people had an added sense of flexibility, that if, say, they secured a mortgage rate today, but in perhaps 6 months' time, they could potentially look to lower that rate if the Bank of England dropped the base rate too, rather than being locked in right now at these astronomically high rates for the next 2, 3, 5, or even 10 years. And to be honest, I don't think any of those are exactly radical measures. And they're certainly not all of the solutions, but they are just 3 solutions that I've come up with 5 or 10 minutes before recording this video that I would guarantee help millions and millions of people save a little bit of extra money, along with give money to the people that need it the most. So look, there's some of my thoughts. Be sure to let me know what yours are, along with the measures that you'd potentially look to put in place if you were part of the UK government, down in the comment section below. Now, before you go, guys, be sure to drop a like on the video, as well as subscribe to the channel if you're new around here, and the YouTube algorithm also recommends that you should check out this video next. With that being said, see you over in the next one.